Okay, I see that I'll just here, except for Vladimir Giderin, but he's experienced enough, so maybe he will connect us later. I see that I'll just here, except for Vladimir Giderin.
Hi, everyone.
Hello.
Alexander, you look really like a chairman of High Court.
Thank you. I did my best. But you don't see what I have like at the lower part of my body. So that
You're sitting like in a border shorts, right? Aren't you?
exactly.
Yeah, it's a COVID fashion.
Exactly.
It's like PwC on Cyprus, right? The same stuff.
Alexander, maybe you start with the introduction for Moot Court, some rules, some specifics.
Yeah, that's the question I wanted to discuss. I will briefly. I don't know if or how my fellow judges are familiar with the rules, so we can quickly run through that. But the question I had on the process itself, will we need to repeat the routine of the teams, or are they well familiar with that when the competition begins?
They already had two oral rounds yesterday, but I would say they differed. So if you also do some introduction part for them, it will be very nice. Also, we have a stream to YouTube, so maybe some people also, for them, it would be better to understand what's going on.
Okay. Well, gentlemen, I don't know to what extent you have had a chance to look through the rules of the competition, and I will briefly maybe run through that. So we have two teams, one representing a taxpayer, one representing a tax authority, who have prepared each team has prepared a written memorandum, effectively a statement of claim and a statement of defense on certain set of facts that they were given to consider. And now we are facing the oral round of the competition, where both teams will have to present their cases. The teams will have 45 minutes each to present their position, up to 45 minutes each to present their position. Whether we want to grant an extension or not, it's completely up to us. But I think in terms of discipline, I suggest that we push the teams to stick to the timetable. Then the teams will have a chance for a brief Q&A, so the tax authority will have, so once each team has presented its position, the other team will have a chance to ask up to 3 questions, and then the other way around, when the other team has presented its position, the other team will have a chance to ask up to 3 questions. Then our job as the judges will be effectively twofold or threefold, I would say. We will need to assess the teams, and we have to assess both the written document and their performance in the oral pleadings. So we will give 2 separate marks for each performance. And it's a kind of an ancillary task but we can resolve the case on the merits and basically either resolve it for the taxpayer or for the tax authority. But these are two separate things, as you can appreciate. So even if a team represents, let's say, a taxpayer and they lose the case, they can still win the competition because of the better performance in the competition. So these are two unrelated things. Alexandra, what I am a bit unclear on is how we technically will run the discussion. Will we kind of gather in a separate room, or how this will be done? When I mean us as judges, how this will be done technically?
When they finish representing of their position, we can just ask them to leave the room. Then you will have time for discussion, and then I will let them join again.
Okay. And also organizational question, I think like in a normal court, we don't present ourselves in the beginning. We just open the hearings and proceed into the hearings.
Yes, but here online, it would be great if you, Alexander, introduce all the judge before the
Okay.
start.
Okay.
Yeah, I guess mere names will work. That's it. I mean, don't need just to say who we are, where we are from. It is something just to end with, I guess.
Yeah. Okay. Okay. Gentlemen, do you have any questions?
Alexander, as I understand, everything is recorded. So the question is whether the spectators and the ones who are, let's say, watching us on YouTube will hear our, let's say, internal discussions between the judges, or you somehow just, how will you manage that? Because as I got from your Facebook post is that spectators may just see what's happening and how the process goes. But if you just switch off the teams, will you also switch off the spectators?
I will try my best to do it technically.
Yeah, because it will be quite strange that judges are internally discussing something. Yeah, and this is, I mean, something which in normal conditions you never understand. And
I see the button how to stop this stream, so I think it will work.
oh, okay, you got it. Good.
Okay.
So if so I think we can start teams already here in the waiting room. If it's okay, I will let them join us.
Okay.
Dear teams, could you please all switch on the cameras? We can start. I don't see any other participants in the waiting room, so I think we can start our hearing. Alexander, please.
Okay. So we are proceeding into the hearing, I guess, right now. And today, the case under consideration in front of the Supreme Court of Savasana is the dispute that has arisen between the Links Regional LLC and Tax Authority of Savasana. The case is heard by the Supreme Court. Let me remind to the teams that, sorry, to the defendant and to the claimant, that the case, that the procedures are strictly timed. I presume you are familiar with the procedures, but each of you will be allocated up to 45 minutes to present your case. And you have a limited number of participants that are allowed to present. And you are supposed to allocate some time to the questions, to up to 3 questions from the opposing party. Then we will proceed into the debates and final remarks. Any questions to the court at this stage? I presume no. Then I think we can proceed. Any motions to the court at this stage as well? No motions. Then I think we can proceed to the hearing itself. And I invite the claimant to present the case.
Your Honors, may it please the court.
Sorry, we would like to show also a presentation to represent our position. I can't demonstrate my screen. Could you please let me do this?
Can you try to do it now?
Oh, yes, yes.
Okay, then shall I start? Your Honors, may it please the court. My name is Dmitry Kostomarov, and together with my colleague Veronika Sinyatkina, we represent the applicant to the case, Links Regional Limited Liability Company. Your Honors, over the course of the next 15 minutes, I will briefly present the case summary and provide you with my argumentation, mostly concerning the nature of the payments under the Regional Marketing Agreement and beneficial ownership status of Links Apparel. My co-agent Veronika Sinyatkina will then proceed with economic substance of Links Apparel's activity before explaining the importance of principal purpose and limitation of benefits tests, occupying another 15 minutes of your time. As your Honors know, Links Regional is a regional company of Links Group, and within the group, it represents a regional retailer. Its activity mostly concentrates on sales of Links and Nisha branded clothing. Links Regional is located in Savasana. It has a legal status of Savasana's taxpayer. On January 1st, 2018, Links Regional and another Links Group company, Links Apparel, have concluded a regional marketing agreement, namely RMA, for provision of international marketing services. The RMA fixed the following conditions. Links Apparel provides Links Regional with an access to corporate SharePoint, where all of the marketing documents relevant for Savasana region may be accessed by marketing employees. Links Apparel provides the IP rights for the use of Links and Nisha trademarks, originally provided by Links International. and thus establishing licensor-licensee relations. As a consideration, Links Regional makes periodic royalty payments in the amount of 7% of its annual revenue from sale of goods on the Savasana market to Links Apparel. Under the previously concluded license agreement for the provision of Links and niche trademarks between Links Regional and Links Apparel that was eventually replaced by the RMA, Links Regional had not withheld tax at source on royalty payments paid to Links Apparel on the basis of the double tax treaty between Asana and Savasana. In equivalent to these conditions, under the RMA, Links Regional applied no withholding tax, considering this as historical conditions. In 2020, the tax authorities of Savasana, the defendant, requalified the nature of income paid to Links Apparel under the RMA into dividends, subject to withholding taxation at source at the rate of 15%, basing such a decision on the mere fact the subsidiary never distributed dividends to its shareholders, despite it being profitable in the period of 2018-2019. The other issue claimed by the defendant was the legal status of another company of the Links Group. Thus, due to defendant's allegations, Links Apparel was not sufficiently staffed by employees in order to confirm its beneficial ownership status. Moreover, the defendant pointed out that Links Apparel's marketing assets had been initially developed by another company of the group, namely Links International. These two statements took into account, the defendant proceeded to the conclusion that Links Apparel ought not to be recognized as a beneficial owner of the royalties received from Links Regional. Hereat, the defendant issued an assessment of tax, according to which Links Regional must increase its corporate tax profits tax base for the period of 2018-2019 for the amount of royalties paid to Links Apparel and to pay withholding tax with respect to royalties qualified as dividends at the rate of 15%. In the defendant's memorandum, it is provided that agreements between Links Apparel and Links International, Links Apparel and Links Regional are just covering distribution of profits, distribution of dividends. Your Honors, with their permission, I would like to plead on behalf of the applicant that the aforementioned payments cannot be requalified to dividends and shall remain as royalties. First of all, one must take into account the dispositions of the OECD Model Tax Convention. Article 10 of this convention defines dividends as income from shares, joint shares or joint rights, mining shares being not debt claims, participating in profits, as well as income from other corporate rights, which is subject to the same taxation treatment as income from shares. Moreover, the official commentary to this article states the definition of dividends relates in the first instance to distribution of profits, the title of which is constituted by shares. In the present situation, however, Links Apparel receives payments from the applicant in the form of royalties in respect to the RMA without any correlation to its shares in the latter. Even though the royalties...
Sorry, Counsel, sorry to interrupt you. Let us talk about, particularly who is the owner of all IP rights on SharePoint?
The initial owner of the IP rights is Links International, the head company of the group.
Okay, the head company of the group. Okay. Does Links Apparel at some point changes or adjusts or improves the particular IP asset, or it does not? I mean, does it bring any additional value to the particular IP asset?
Of course, it not only uses the documents that are provided by SharePoint and this IP server, but also it implements new documents relevant to the regional market and relevant to the trademarks in the case.
So you claim that Links Apparel adds actually new files on the system. Is that your position?
Yes, we must presume so.
Are you making the position on the assumption? Or this is
no, we don't.
Okay, so you're playing around the argument. Okay, do you let us talk about now the amount of the staff and employees of Links Apparel. Who are they? Can you elaborate on that?
Yes, Links Apparel are staffed by 40 employees and 8 marketing employees.
Okay, so
The senior management of Links Apparel is partly represented by Links International and partly resides in Asana, so being the initial staff of Links Apparel itself.
So can we assume that, I mean, considering that there are, let's say, a mixture of senior management between Links International and Links Apparel, that at a certain extent, Links International controls actually Links Apparel?
Well, we can presume that if the company employs same qualified management that can fulfill some tasks and do some jobs, that does not exclude the autonomous status of the legal entity.
So what are your grounds for claiming that this is autonomous, let's say, entity? Just briefly.
Briefly, that this entity has, the activity of this entity has economic substance. It is sufficiently staffed by employees, and it bears risks within the group.
Okay, what kind of risks?
If somehow the Links Apparel would fail to fulfill its role within the group, so transfer some marketing strategies or fail to control their fulfillment, the whole group and Links Apparel itself will suffer losses.
Okay, so we have, okay, so what I hear from you, counsel, is that we have the company of 40 employees, 20% of which are marketing specialists, whereas let's say 80% are people not competent in marketing, and their role is quite unclear. That's what I hear from you, counsel.
It's not that it is unclear. The other staff is represented by merchandising staff. We must distinguish marketing employees and merchandise employees, and we may also say that some of the staff is engaged in the research activity.
No, proceed, counsel. Thank you.
Okay. Like I said, in the present situation, however, Links Apparel receives payments from the applicant in the form of royalties in respect to the RMA without any correlation in initiation of the letter. Even though the royalties are based on the annual revenue, which is not even denied by the applicant, it does not constitute the distribution of profits, which is a major criterion for dividends. Under the RMA, the royalties are calculated on the revenue of sales of goods distributed in Savasana, which is what Links and Nisha brands, being a part of the RMA, are provided for, and not on all of the profits received by Links Regional. It is wise then to distinguish two different tax bases. One is being all profits of the company and subject to dividends, and other only revenue of sales on goods in Savasana, subject to the royalties in question. Also, shall I point out that the defendant was misguided in his memorandum in understanding the elements of the RMA. The RMA, as I have already said, replaced the previously existed license agreement between Links Apparel and Links Regional. In the present case, if it was not already evident, the RMA did also include provision of Links and Nisha brands. If not, it would not be able by any means to replace the license agreement. Yet the defendant supposes that only a SharePoint access is the subject to the RMA, which is erroneous. The defendant's misconsideration of the royalties' nature could only occur because of the contractual access to corporate SharePoint. That is as well a part of the RMA conditions. Indeed, Links Group uses a modern technology service for access to corporate documents. And if just a service share would not fall under the royalties criteria, the Links Group SharePoint should and must do so. It does not represent a mere software as a service, as the defendant described them in his memorandum, at least because software as a service does neither give an access to databases, which is actually the case of SharePoint, nor does it require help to use, being very easy to navigate. However, even higher management from Links International might be called to help with some SharePoint documents issues. This statement proves that the defendant makes ungrounded allegations, or may I just say wrongful assumptions. Speaking of SharePoint, the access in question did not constitute only a mere transfer of regular known documents, but also a transfer of intangible assets in the form of a commercial know-how. that contributed sufficiently to success of Links Regional. Article 12 of the OECD commentary refers to the term of know-how in classifying as royalties the payments received as a consideration for information concerning industrial, commercial, or scientific experience. Transactions under the RMA constitute with no doubt the transfer of undivulged information of an industrial and commercial nature that has been developed internally within the group and provide material economic advantage for both Links Regional and Links Apparel. Such an information does fall under know-how notion, which is subject to royalty installments. Thus, the appropriate remuneration between Links Apparel and Links Regional shall only be treated as royalty payments. As for the conclusion of my first statement, it is wise to remind that double tax treaty that has been enforced in years between Asana and Savasana is based on the OECD Model Tax Convention and provides the royalties arising in Savasana and beneficially owned by a resident of Asana shall be only taxable in Asana. Therefore, Your Honors, considering that there were no dividends and only royalties, withholding tax should not be applied to the payments under the RMA. As for now, it is necessary to proceed my position, speaking of defendant's misguided allegation that Links Apparel has no beneficiary ownership on the payments under the RMA. It is important to underline that the applicant never concealed or tried to disguise the conditions of the RMA. Indeed, there has been established such legal relations where Links Apparel only stood for a sub-licensor of the IP rights initially provided by Links International. Yet Links Apparel must be treated as a beneficial owner of the payments under the RMA, considering the following. Most significant is that Links Apparel's rights to use and enjoy the payments were not constrained by any contractual or legal obligations to pass them to another company or individual. As a matter of fact, in its memorandum, the defendant not even calculated the difference, the margin, between royalty rates in two agreements that took place within the group, but also bounded them. Nevertheless, the mere existence of the IMA, the contract that had been signed between Links International and Links Apparel, the object of which consisted on provision of the aforementioned IP rights, only proves that Links Group has complex relations within the group, based on the concrete role of each of its companies. And even though the structure of both the RMA and the IMA is similar, the agreements are independent from each other and their economic substances are autonomous. The main function of Links Apparel is to perform a regional consolidation, adopting global marketing strategies to local markets. And what is more crucial for the statement, Links Apparel is used as a regional marketing hub for delivering these strategies and controlling their fulfillment. It is only normal that Links Apparel would stand for a sub-licensor of the trademarks provided by the head company, so the group successfully establishes its nexus and gain profits afterwards. Furthermore, Links Apparel's status as an independent economic and law entity should not be doubted. This company maintains staff and office having more than 40 employees and 8 marketing employees represented by marketing staff. Also, it is ascertained that Links Apparel carried risks for its economic activity, made relevant business and executive decisions. Your Honor, if these criteria are not sufficient in order to consider a company to be autonomous, what companies then would remain independent? The defendants claim that the applicant's activity can be sufficiently influenced by Links International's high management staff cannot withstand the common practice held by the majority of companies, not only in Asana, but worldwide. The mere fact that companies can employ same qualified people for some specific jobs cannot exclude economic independence of a legal entity. Senior management personnel of Links Apparel is only partly represented by Links International employees. A part does not mean any numbers. Thus, the defendant's statement about the activity being sufficiently impacted is groundless, and should I say once again, it is only a mere assumption. Thus, applicant supplier, Links Apparel, fully corresponds to the notion of the beneficial owner. It performs its economic activity bearing all including risks and can be qualified as an autonomous and independent legal entity. The defendant's intention to consider these relations as a defect of beneficiary has no ground and no legal maintenance. since commonly accepted court ruling of a majority of jurisdictions abide the view that taxpayers ought to be free to do business by any lawful means, unless, of course, its business consequences diverge from the real economic position and violate, therefore, tax legislation. In the present case, no violation can be proven because it never existed in the first place. Your Honors, may it please the court. With all the respect, I express to you my appreciation and yield the floor to my colleague, Veronika Siniatkina.
Your Honors, may it please the court. I would like to continue representing the applicant to the case. I would like to complete my colleague's argument and add that Lynx Apparel shows a sufficient economic substance. It provided applicant with significant marketing services. Therefore, Your Honors, royalty installments were lawfully accounted in a corporate profit tax base of applicant expenses. According to Chapter 7 of the OECD guidelines and its multiple manuals proposed by international audit companies, there is a major criterion that proves an economic substance of doing business. Thus, companies must be able to prove that the services has been actually received and it's beneficiary for the company's business activity, which is a benefit test. In the case of intragroup services, the tax authority would analyze whether a third party in similar circumstances would consume the services on similar terms, whether outsource or consume internally. In our case, Lynx Apparel acquires IP rights and the rights to use the brands in order to redistribute them to Lynx Regional. It is ascertained that one of the Lynx Apparel major business activity is developing the original and finding crucial for Savasana market documents, then sending it to Lynx Regional. Activity that is conducted by Lynx Apparel is therefore economically feasible and beneficiary for the Lynx Apparel itself. Moreover, under the RMA, the rights to use the brands and other supplement services are rendered in exchange for royalty payments. These payments constitute 7% of Lynx Regional's revenue basis. Considering that Lynx Regional is a regional retailer and its activity mostly consists of sales of branding clothing, major part of its revenue depends on these sales. Consequently, the enjoyment of the very right to use the brands and profits from sales in Savasana market are contingent on each other. If we apply the approach of the tax authority, what is the sense in any intergroup service? How big companies shall organize their work in the group? What is more important, the average royalty payment rate should constitute 25% of the profit gained from the goods provided by the licensor. This information is given in some doctrine papers and in some reports by Deloitte, KPMG. For example, some authors nowadays speak about not even 25%, but even 33% or even 15% of the profit gained from the goods provided by the licensor in this sphere. In the present case, the royalty rate is only 7% rate. Even if Lynx Regional profits that are gained due to the goods provided by the RMA constitute 1/4 of its total revenue basis, the rate is still acceptable. Thus, the conditions of the RMA would be applicable to any third party in the same conditions. Your Honors, we would like to notify that the next argument hadn't been included in the memorandum. The doctrine of freedom of contract has always been respected by the law, which allows parties to provide for the terms and conditions they will govern their relationship. The tax authority has an opportunity to prove the fictitious activity of the taxpayer, if any, but at the same time doesn't have a right to interfere with the activity of the taxpayer and must respect the legal form of lawful activity. For example, in the case Uber BV and others versus Eslam and others of 2021. The Supreme Court of the UK set a clear benchmark that the parties are free to choose their economic structure. The tax consequences follow, and the court shouldn't interfere with the terms agreed on, unless the relationship constitutes an abusive transaction. This position was also shown in the case Revenue and Customs Comms versus RBC Deutschland Holdings GmbH. Links Regional and Links Apparel choose the remuneration form that they consider to be the most suitable for their relations. The remuneration in the form of royalties doesn't abuse any tax law legislation, and such a choice of remuneration is fully lawful. As a result, royalty installments were lawfully accounted in a corporate profit tax base as expenses. Secondly, DTT, covering the transactions between applicant and Links Apparel, is applicable as it falls under the Principal Purpose Test or PPT test and Simplified Limitation on Benefits test or LOB test, and covered by a multilateral convention to implement tax treaty-related measures to prevent base erosion and profit shifting, or MLI. To begin with, SNA and Savasana have filed notifications to the OECD with respect to DTT, and opt-in for application of the PPT test and simplified LOB test. MLI is applied to taxable periods starting on the 1st January of 2018. Article 7 of MLI contains provisions regarding the application of LOB test to prevent treaty shopping actions. Your Honors, we would like to draw your attention that requirements of the Principal Purpose Test of the MLI are duly met by the company. The PPT should be applicable to determine whether tax treaty benefits can be used. The PPT states that the mere intention of obtaining tax benefit should not be the one of the principal purposes of any arrangement or transaction. To adopt global marketing strategies to Savasana market, Links Apparel needs to provide Links Regional with economic advantages in the form of information considering industrial, commercial, or scientific experience know-how. Thus, Links Apparel had real functions and real business goal. Judging by these facts, we can state that there was no treaty abuse which falls under the PPT test. Moreover, a limitation of a benefit test is applicable to the case as well. LOB test is a specific anti-abuse rule. It's stricter than the PPT test because it contains the term qualified persons and requirements for companies related to the active conduct of a business. Since Links Apparel is considered as beneficiary owner, that was proven earlier by my colleague, it itself receives treaty benefits and shall meet the LOB test requirements. According to MLI, if taxpayers do not meet the requirements of qualified persons, they will still use tax treaty benefits operating an active business. This test confers only those treaties benefits applying to particular terms of income related to the business activity. In the report, Preventing the Granting of Treaty Benefits in Inappropriate Circumstances, Action 6 of 2015 of the OECD, there are some commentaries to provisions of MLI. Term active conduct of a business defined there contains the provisions that a company will be considered to be engaged in an active conduct of a business only if persons whom the entity is performing its functions conduct substantial managerial or operational activities. Moreover, paragraph 10 of Article 7 of MLI excludes several activities from this term. However, they are not applicable to Links Apparel. In our situation, according to commentaries for applying active conducts of a business LOB test, the company shall, firstly, be engaged in active conduct of a business, and secondly, payment for which benefits are wanted is related to this business. In our situation, both criteria are met. Firstly, Links Apparel conduct active business. And secondly, royalty payments were a consideration for provisions of international marketing services and related to this business. As for use of the LOB test, it confirms all criteria of the LOB test related to the active conduct of business. Your Honors, therefore, Links Apparel has a right to use tax treaty benefit in this situation. As for applying domestic anti-abuse rules in the situation of the meeting required conditions, including LOB test for withholding tax exemption under the DTT, this is an ambiguous question. Your Honors, we would like to notify that the next argument hadn't been included in the memorandum. On the one hand, domestic rules, if any, can be used. Double taxation treaty do not exclude the possibility of establishing special rules of taxation at the level of national legislation to prevent tax minimization. This position is supported by the Presidium of the Supreme Arbitration Court of the Russian Federation in the case of the Severny-Kuzbass coal company. We use this case to apply into this situation because in this case, the domestic court considered the situation when there is a conflict between domestic anti-abuse rules and DDT. Moreover, according to commentary on Article 1 of the OECD Model Tax Convention, domestic anti-abuse rules are technically not in conflict with treaty provisions and therefore not affected by them. Also, the Indian Central Board of Direct Taxes has clarified that application of the domestic anti-abuse rules is possible, even in cases where an LOB article would apply. Since, according to the government, in certain instances, the anti-avoidance measures may not be adequate. But on the other hand, domestic anti-abuse rules would be applied only if the anti-avoidance measures in the treaty were found to be inadequate, like it was in the decision of the Indian Central Board of Direct Taxes. LOB test is strict enough to prevent tax avoidance, since the treaty provides for this test and some provisions of PPTE test, domestic anti-abuse rules shouldn't be applied. If a case of avoidance is sufficiently addressed by the LOB test, domestic anti-abuse rules shall be invoked. Moreover, first approach definitely increases the risks for non-residents in obtaining some benefits under income tax treaties and may impact upon investor sentiment. According to aforementioned commentaries to MLI, the term business is not defined and must be considered under domestic law, applying the active business test. Nevertheless, the doctrine currently recommends interpreting this term business autonomously, using domestic law only to confirm the autonomous meaning. The doctrine supports the point of view that rules which provided by MLI should be used firstly as the extended interpretation of its position. That's why application of the national rules will only complicate its application, leading to a lack of uniformity and wide discrepancies in its application. Your Honors, in our opinion, the second approach would be more justified. Thus, the anti-avoidance measures provided for in the DDT, like LOB test, should be given precedence. Domestic anti-abuse rules cannot be implied. To sum up, applicant rightfully applied benefit from DTT regarding the income of Lynx Apparel in the form of royalties. Your Honors, with respect to the royalty payments paid under the RMA, Lynx Regional as a tax agent applied no withholding tax under the provisions of the DTT. Your Honors, thank you for your attention. That's all.
Thank you, Counsel. I suggest at this stage, my fellow judges, that we let the defendant ask any questions to the claimant, if there are any.
Your Honors, maybe ask one question to the other party.
Yes, please.
The question is following. The representative of the claimant mentioned the so-called merchandise employees of Lynx Apparel. So if it is possible, could a representative comment on this statement as according to the substance of the case, according to the all materials which were provided within this case, we have no information describing this sort of employees within Lynx Apparel company. Moreover, judging by the fact that Lynx Apparel is a marketing company, then what is to merchandise in this company? Thank you very much.
I would like to answer the question. The fact is that indeed, Lynx Apparel is a marketing company, yet it was initially created to develop the regional market, Savasana region. And thus, if only marketing employees would be engaged on the matter in the market without any merchandise, how the marketing company would sell anything, since Lynx Group is initially is a retailer of branded clothing. Without merchandise, it is impossible to fulfill its activity.
I would like to add my colleague that this fact was in the substance of our case, that Lynx Apparel Lynx Apparel renders not only marketing but also merchandising services. That's why we can conclude that there are some staff which responsibilities are some merchandising services.
Thank you. Defendant, do you have any other questions?
No, thank you. We do not.
Thank you. Now I turn to the panel. Do you have any questions to the claimant?
Yes, I have, but I guess Nikolai would want to add more questions. So maybe Nikolai would start and I would jump after him.
Yeah, thank you, Vladimir. So essentially, my questions were rather concerning the functions and the control. The respectful counsel for the applicant claimed that there was, let's say, mixture of the employees between the ultimate parent company and our marketing so-called company. Could you please elaborate on that? What was the functions and who, in fact, rendered the management of the company receiving the royalties? Thank you.
Honor, we don't have these facts in our case, so that's why we can't conclude anything just because we think so. That's why we just can say that there are some employees with different functions in this company.
One rather technical maybe question: what is the shareholders percentage of the ultimate parent company in our recipient of the royalties?
Sorry, could you repeat your question, please?
Sorry, Lynx International, the shareholding in Lynx Apparel, what is the percentage? Thank you.
Lynx International owns 20% of Lynx Apparel. Oh, I'm sorry, 51% of Lynx Apparel. Of Lynx Apparel's share stock.
Wouldn't you assume that, well, as probably my fellow colleagues would also elaborate on that, wouldn't you assume that this is, I mean, this is a significant amount which allows exercise ultimate control over the Lynx Apparel by Lynx International via corporate governance and shareholders governance?
Well, indeed, 51% is not 1%. Yet we're talking about the group and the holding of the group. So we may say that even it's a significant amount, but shareholder do not perform any business activities within the Lynx Apparel itself. They just receive benefits from owning shares of Lynx Apparel.
Okay, if I may ask additional question, I'm interested in the, I would say, chain of cash flows that are represented by royalties. Since it's not clearly apparent from the statement, from your statement, as well as from the tax authority's statement, can you elaborate what amount of cash flow retention, I would say from let's say balance sheet perspective or cash flow statement perspective, if let's say $100 of royalties are landed at Lynx Apparel, so is there any back-to-back arrangement whereby significant part of that royalty cash flow would land in other group companies of Lynx International or in third-party companies?
Like I have already said, Lynx Apparel is an autonomous entity, and some or significant amount of its income is spared on any sphere that Links Apparel would esteem to be important. But only 7%, in consideration, Links Apparel makes periodic royalty payments to Links International under the IMA. Yet there is no connection between the initial, am I heard? Yes. The initial RMA and the IMA.
Still, can you please answer the question more specifically? Because the specific question related to the cash flow amount.
Yes, from Links Regional, only 7% of revenue goes to Links Apparel. And there is no other data on distribution of these royalty payments afterwards.
Okay, clear, thank you.
I will ask a question. Sorry,
I'm sorry. In the course of the discussion, we still have one question. May we ask one?
Well, I think you've had your chance to ask your question. I think now it's time for the judges to ask the claimant.
Thank you.
The question I wanted to ask to the claimant is, it looks like from your statement of claim, you are saying that Links Apparel is developing local marketing strategy for the region. The question I want to ask is, are Links International and Links Apparel residents of the same jurisdiction?
Yes, it is ascertained that Links International and Links Apparel, both companies, are residents of Astana.
Residents of Astana. So Links International has, I think you said 1,800 employees in Astana. And Links Apparel has, you claim, about 40 employees also in Astana.
I'm sorry, would you please repeat? Oh, what about 80 employees?
1,800 employees.
Yes.
Yes, and in the same jurisdiction, you have 40 employees in a separate legal entity developing local strategy. Is this correct?
Well, actually, 40 employees of Links Apparel are engaged in OUM region. That is stated in the case. It is ascertained.
Okay, I'm just trying to understand that you have a regional hub, but it's all in the same jurisdiction. Okay, and one more question on the cash flows, if you can comment. Is the obligation of Links Apparel to pay royalty to Links International contingent in any way on receipt of royalty payments from subsidiaries?
They are not.
Thank you, Counsel. If there are no more questions from the panel.
No, may I ask a question?
Yes, please.
Actually, is any duplication of functions between Links Regional and Links Apparel? I mean, who's from Links Regional staff actually raised questions to which Links Apparel answer? And to whom they provide an access to SharePoint?
Links Apparel provide an access to SharePoint to Links Regional, indeed. And Links Regional is a retailer of the group. It's a regional retailer. So the functions of the Links Apparel is providing with not only providing, but creating the strategy, marketing strategy, and controlling the fulfillment by Links Regional. Links Regional actually even obliged to give some feedback to Links Apparel on the matter. And Links Regional is a retailer.
Yeah, but I mean, in development of Nikolai's question, in terms of additional value which Links Apparel brings to this chain, in fact, this additional value should be considered in comparison with Links International, which created these materials from one side, and from another side, in comparison with the local team of Links Regional, which also, as we understand, has already involved somehow in developing marketing, in executing marketing, and they have already, in position to understand whether particular marketing concepts are workable in their territory or not, and ask some particular questions to Links Apparel, right? And the primary task of Links Apparel is to answer on these questions, right? And in this the question is to which extent Links Apparel actually adds something to the local functions which executed by the local team employed by Links Regional.
Your Honor, thank you for your question. It's really important to understand the role of Links Apparel in this chain of rendering services. And it's important to say that Links Apparel has no direct contracts with Links International, and Links International has no experience and knowledge in a concrete region. That's why we really need Links Apparel as a more experienced company which can help the company with no such information about this specific market, and that's why it's answer some difficult questions of the other company. And only Links Apparel knows specific of own region and provides. That's why the Links Apparel provides some data from research.
Okay.
I would like to add some more data on the basis of acknowledgement of specific region of the company. It is ascertained that Links Apparel has been developing the region for about 30 years. So the staff of Links Apparel are more qualified to work in the region to provide marketing strategies, since the region was known, examined, and researched by the company.
Okay, so these 8 employees of Links Apparel who work for 14 subsidiaries in this region actually know the market where Links Regional operates, their local market, much better than local staff employed by Links Apparel, Links Regional, right? And this is their primary task to occupy this knowledge and improve the local marketing position of Links Regional, right?
Your Honor, I would like to draw attention that these 40 employees are employed in own region. It's not
eight employees for 14 subsidiaries.
40 employees also are employed in own region, and this. If we are talking about these 8 employees, they can be assigned as probably and very high qualifications, and it's a business decision to employ more qualified employees, but with, for example, more salary. We don't know this fact because there is no this fact in the case, but these employees can really do the functions and be really useful for our company.
Okay.
It is actually unknown how many employees are enough or not enough to fulfill some task. Maybe 16 marketing employees would be enough. Maybe only 4. So 8 is 8.
Okay.
I have a couple of more questions if Gennady is done with his one. Sorry,
Yeah.
Gennady, if you've not done, please go on. If you've done,
No,
let me.
Go ahead.
Yeah. So to be honest, I would like to go back. the description of the exact nature of both agreements remained blurred or inconcrete, at least to me. So would you kindly describe them again? To the judges pack. So the regional marketing agreement is described to have replaced a license agreement on 3rd January 2018. So the previous license agreement was the provision of links and niche trademarks. And then it says that the structure of the RMA is very similar to the IMA concluded on the same date. The IMA is the international marketing agreement between Links International and Links Apparel. So the remuneration structure, the remuneration rates, the royalty rates are described as following. Under the RMA, it is 7% of the revenues of the regional subsidiaries. Under the IMA, which is a back-to-back kind of agreement, the remuneration is 5.5% of annual revenues from sale of goods by Links Apparel subsidiaries in home market. So just a couple of minutes back, you represented that there is no link between the royalties received by Links Apparel under the RMA and the payment of royalties under IMA. So can you please, given these additional details provided in the
Your Honor, thank you for this question. It's really crucial for our case to understand what is the difference between these documents. And as for IMA, it provides trademarks from Links International to Links Apparel, and RMA includes marketing services and presumably same trademarks provided from Links International to Links Apparel. And just similarity of these two facts doesn't mean that these documents are the same. And the rate also changed because of them, and that's why these are two different documents, not just changing the name of the document and all.
Like I've mentioned before, we're talking here about the group, and the policy within the group may be similar. As similar may be documents and their drafts. If we are using the same draft, but the conditions, including rates, including services or any other goods provided, they must be different. And that is only normal for the common business of the company, of any company.
Dear applicant, dear taxpayer, we are all lawyers here as judges, so we need to be absolutely precise about the legal nature and subject of a commercial contract. Okay, so you as representatives of taxpayers need to be very clear what is the object of the contract. So the object of the contract is of the IMA is a non-exclusive license. So the intellectual property law states that the licensing arrangement applies to the objects of intellectual property and not to services. Because for services, you have services agreements, and for intellectual property, you have kind of IP assignment agreement or licensing agreement. So as I understand, the IMA is a mixed contract, which contains both marketing services and assignment of IP, like trademarks or brands. So in that respect, I would like you to make a more clear comment. What is the exact legal object of the IMA, and what is the exact legal object of the RMA? Is the legal object under RMA also provision of a license to use intellectual property for which the royalties are paid? So yes or no? Please comment on that.
The subject of IMA is provision of IP rights, indeed. The subject of RMA are the provision of services and IP rights. Yes, it is a mixed contract. We're dealing here with the mixed contract.
Yes, and then finally, is there any split, at least for management accounting purposes, between the element relating to royalties or IP in the remuneration under RMA and IMA, and the element relating to services under both agreements? Because for transfer pricing perspective, and in my past life as partner for a Big Four accounting firm, any transfer pricing benchmarking study would necessarily provide for a clear analysis for mixed contracts, for a split for services contract or for IP license. So is there any information about the split?
There is no such information about the split. We have a unified payment.
Okay, I'm done with my questions. Thank you.
I can ask you one technical question. So when we talk about the services for provision of the access to the to our, let's say, software database, does, for example, our company, which is, let's say, the recipient of the royalties, require any special hardware, for example, or equipment, additional installation or something, or let's say the user of the database, which is, let's say, on the bottom level, just requires merely access to the website. So effectively, what does the service imply? Does it imply some effective actions, or just granting to the existing database? I mean, this question is quite significant in the light of that we have 40 people, 8 of which are of marketing profile. So can you elaborate on that? So do we?
Yes, Your Honor, thank you for the question. Like I've already said, there's a little information about the particular process of this service. Yet there is one crucial point that states that even high management staff from Links International might be called to resolve some issues with the SharePoint. This means that the SharePoint itself is a complex and a difficult hardware to use by an ordinary employee. So we may say that it is a crucial point to consider it as a hard-to-use software, not just an easy and cheap software.
So the question was, what is the service? I mean, can you just give us detail? The service is as follows. Now, this is where, for example, the competence at the level of Links Apparel is used, and so on and so forth. We just need precise understanding, not just to open the discussion whether we are a shell company or not a shell company. And in fact, we exercise particular functions, and we use our competence, and we add value on that. Thank you.
Your Honor, thank you for this question. In the citations, provision of documents is not the only function. Another function is providing answers to questions in relation to marketing documents, or to find some employees of Link International who can help Links Regional with the issue. That's why we can't technically discuss only a provision of documents as the only service in this case.
I have a final one from my perspective. Is there any information about the IP development or R&D expenses from the balance sheet data from the company Links Apparel? So if you claim that Links Apparel is a beneficial owner of royalties, I would imagine that they also must be an economic owner of underlying IP, right? So the IP are the brands of Nisha and Links. So is there any data about the IP management, or how the IP is managed, how the IP is developed? Is there any R&D spend? So is there any advertising spend that would kind of confirm the economic ownership of IP on the from the Links Apparel level?
Your Honor, thank you for this question. It's a very interesting question because it can be very crucial for understanding the situation with these IP rights. But there is no information on IP rights development or brand registration in the case, and we can't make our position on our assumptions.
Okay, maybe there is the data about the management of IP, at least at the Links International LLC level, about their legal registration and economic ownership, like, again, R&D expenses, advertising cost, and IP management activity at the Links International level. So is there any data in the files?
In our files, there is no such data about how high management developed the IP rights or some registration of these IP rights and some exclusive rights and all.
Okay, maybe in the meantime, you can look up the balance sheet before the final deliberations by the judges.
May I ask a question? As the case is described with the significant transactions, both the IMA and the RMA relate to an international marketing strategy. And my question is, could you or do you have any information about a specific regional marketing activity performed, say, for Savannah? So how does this differ? So what are the 8 people in the marketing department in Links Apparel provide as a special strategy for this single regional market, Savannah?
Your Honor, thank you for the question. Actually, we can only imagine such a situation. For example, just for example, there may be a different climate, there may be a different salaries of people, and therefore there will be different prices for clothes. There will be different clothes in the whole. There are different market demands in every region, in every country.
Okay, thank you.
Thank you.
I also have a final question as to the overall corporate structure of the group. Do we have any information on the shareholders of Links International and on the international qualification of Links Free for All? We know that the principal class of shares of Links International is not traded on a stock exchange, but only Class C. But do we have any other shareholder information?
I'm sorry. Thank you for the question, Your Honor. No, there is no such information about shareholders of Links International. And the only information which is crucial for the case, which is just presented in the case about Links Free for All, is that it's a non-commercial company.
But let me follow up here. There's also no memorandum of understanding between the 2 countries involved that this non-profit organization is somehow qualified under the LOB. There is no such agreement.
Sorry, make it take a second, please. Okay. Considering the LOB question. I may just say that we apply LOB test and we fulfill the requirements only at the level of Links International.
On the active conduct of business test. A final question, just for my understanding, under the rules of procedure, who would bear the burden of proof for equivalent beneficiaries?
Would you please repeat the question?
So there are several escapes to the LOB clause. One of them is the active conduct of a business test that you have applied. Another escape would the equivalent beneficiaries test under Article 7 of the MLI, And the question is, who bears the burden of proof that this test is fulfilled? Would it be the taxpayer claiming the benefit or the tax administration denying the benefit? Is there anything that we can assume here? Or is it the judges know the law?
We can say that taxpayer should prove that he has this right. And in our case, for example, Links Apparel has its beneficial owner confirmation letters and some certificates of tax residency in the contracting state.
Okay, very good. Then I have one final question. The assumption that the royalties have to be reclassified as dividends and then charged at the rate of 15%. Does this also mean that the assumption is that the beneficial owners are Links International for 51% and Links Free for All for the other 49% of the dividend? Or would we have a different beneficial ownership assumption under your theory of the case?
According to the case, we have no assumption who can be another beneficiary owner, and it's the fact that the tax authority should prove and said who is the beneficial owner in this very case.
In this case, Links Apparel is the beneficial owner. No other information is proven.
Very well, thank you.
And may I just ask a final question in terms of clarifying the nature of RMA? It states in the conditions that this agreement has replaced a license agreement for the provision of links and niche trademarks. And since you explained that regional marketing agreement is actually the marketing agreement in nature and doesn't provide any IP rights, on which basis now Links Regional uses links and niche trademarks?
Well, actually, it does provide IP rights, first of all, and secondly, I may just say it's a mixed contract, like we have already said. It has both IP rights and services as the subject of the RMA.
So Links Regional still uses these trademarks, right, under RMA?
Yes, indeed.
And in addition to this, Links Apparel provides with this support, right?
Yes.
Okay. And what was the rate in the license agreement, which was previously, concluded between Links Apparel and Links Regional? The same 7%?
Well, this information is unknown, completely unknown. Yet we provided, Your Honors, with some information about just statistics and media royalty rates, etc. So it may be 10, it may be 7, maybe 15. The information is unknown.
In fact, the information which you provided was concerned about a profit as a royalty base, not the revenue. So it wasn't correct in that sense. But I hear your answer. Okay, thank you.
Thank you.
I'm very sorry. One more question from me, if I may. In the beginning of your statement, dear taxpayer, when you challenged the tax authority's assessment on reclassification of royalties to dividends, you stated that such reclassification as such is not because the royalties transaction should be looked at and not reclassified. But I didn't quite clearly understand what was your basis for inappropriateness of reclassification. And can you please just maybe repeat again, why do you think that reclassification is appropriate from purely legal perspective? And also, can you answer a technical question? Are you familiar with the concept of secondary adjustment under the paragraph 2 of Article 9 of the Convention?
Your Honor, thank you for the question. Considering the first part of your question, the subject of the RMA has no in common with the share stock of companies. So shares does not influence the subject of the RMA, nor the rate, etc. Considering the second part of the question, would you please repeat?
Okay, are you familiar with the concept of a secondary adjustment that is embodied in the paragraph 2 of Article 9 of the OECD Model Convention, as well as the United Nations Model Convention? Paragraph 2 of Article 9 states that under the arm's length principle, the tax administration actually is allowed to make a so-called secondary adjustment that effectively amounts in a reclassification of a legal nature, of a formal legal nature of a transaction in a different transaction that is a consequence of application of arm's length principle. That's just a side comment. So you may wish to study the commentary to OECD.
I may assume. I'm sorry to interrupt you. Thank you for the question. I may assume you're talking about substance over form approach.
No. I was talking about the concept of secondary adjustments, but let's keep that. I understood your answer. Thank you.
Thank you, dear panelists. Thank you, dear claimants. I think it's the right time now for the defendant to present their case. So if the defendant is ready, the floor is yours.
Your Honor, thank you very much. If it is possible, may we turn on our screen sharing? The usage of pictures and presentation is allowed by the organization party.
Yes, please.
Thank you very much. Could you allow it, please? We cannot. Oh, thank you. We are ready to start, please.
Your Honors, we would like to represent the position of the tax authority in that case, since the whole information relevant to the corporate structure has been already disclosed. We would like to proceed to the subject matter of our position. And first, I would like, from my side, reveal some relevant official documents that we will further refer to, and name the reasons why actually we can't refer to these official documents. So the first one is Model Tax Convention on Income and Capital from the year 2017. In the subject matter of the case, it is said that the treaty between the parties is based on this Model Tax Convention. That's why we actually can appeal to the convention. The next one, the next argument is that according to the common practice, the OECD commentaries on the Model Tax Convention shall apply since the states involved in the OECD can normally use the commentaries while interpreting the rules of Model Tax Convention. The other argument is that Vienna Convention on the Law of Treaties from the year 1969, in the Article 32 mentions that actually the states that are members of the Vienna Convention are bound by these rules, by these commentaries. And moreover, the same article of Vienna Convention prescribes to apply the supplementary means of interpretation, which we can actually use in the form of commentaries. So now I would like to proceed with our first argument, which concerns the permanent establishment. And actually, I would like to start with official rules. So what is actually permanent establishment? According to Model Tax Convention on Income and on Capital 2017, which will be further named as MLI Convention, permanent establishment is a place of business through which the business of an enterprise is wholly or partly carried on. So there are, in this paragraph, in Article 5, there are some essential criteria which should be met in order to meet the existence test of the permanent establishment. The first one is the place of business. So there must be premises, in certain instances, equipment. In our case, I'm talking about representative office, so that will be clear. Representative office, naturally, there is an office. So there was the office was incorporated on the territory of Savasana country. The place of business must be fixed, so established at a distinct place, which also exists in the case of representative office in Savasana. And the third argument is that the third criterion is that the business should be actually carried on in the place of business. So there must be some employees, some staff which would carry on that business. We also know that there are 40 employees that are present in our home region, and obviously there are some in representative office which carry on that business on collecting information about potential consumers in the Savasana region. According to Article 5, Para 4D, there is an exemption provided. So there is a case mentioned which cannot trigger the existence of permanent establishment. We will not ignore that. So according to this paragraph, in case the business functions is solely for the purpose of purchasing goods or merchandise or for collecting information, the enterprise can be, the place of business cannot be considered permanent establishment if this activity is of a preparatory or auxiliary character. So actually the last sentence is of the essence here. If the same activity of collecting information is a substantial part, is a crucial part of the business of the whole group, then the place of business may be considered permanent establishment. That we can derive from the commentaries on the Model Tax Convention, Article 5, Paragraph 4. There it is written that the decisive criterion is whether or not the activity of the fixed place of business in itself forms an essential and significant part of the activity of the enterprise as a whole. Then I would like to comment about to comment on particularly the structure of the case in hand. Thank you. Why is representative office permanent establishment? According to Article 13, Paragraph 4 of MLI Convention, the place of business, so in our case, the representative office, shall be, will not fall within the exceptions that are provided by the Paragraph 4D, Article 5 of Model Tax Convention. If a closely related enterprise of that place of business carries on a business activities in the same contracting jurisdiction, and the overall activity resulting from the combination of the activities carried on by these enterprises constitute complementary functions that are part of a cohesive business operation. So there are three criteria which are essential for us. First of all, there must be a place of business, which in our case is representative office, which is maintained by the enterprise. Links Apparel is a maintaining enterprise. And if the same enterprise or a closely related enterprise, I will further explain why Links Regional can be actually considered closely related enterprise, carries on a business activities in the same contracting jurisdiction. As long as Savasana is actually contracting jurisdiction and Links Regional and Representative Office carry on a business activity in this region, they may be considered, well, closely related parties. And eventually the activities constitute complementary functions and are part of a cohesive business operation. it will be further explained by my colleagues why actually these operations are of a cohesive character and why the activities of representative office are of a substantial part. So what concerns closely related parties, which you can see on the scheme, a person is closely related to another one. It actually should be deemed if one criterion is met. If both enterprises, in our case, Links Regional and Representative Office, are under control of the same person or enterprises, so in our case, Links International obviously has a control on the two of these persons, or if another person possesses directly or indirectly more than 50%, you can see that Links International directly and indirectly has more than 50% of representative office in Links regional company through Links apparel share and its direct share. The beneficial, the parties shall be considered closed enterprises. I would like to provide some examples when the activities exempted from those triggering the existence of permanent establishment were actually deemed triggering permanent establishment. The first one is quite theoretical. It is provided in the Action 7 from the base erosion and profit shifting project. On the page 34 in paragraph 22.6, there is an example of preparatory and of preparatory functions, but they actually should be deemed. So I'm sorry, I haven't mentioned the right example. I'm sorry. I would like to refer to another example, which is placed in additional guidance. In additional guidance to the same action 7 of the base erosion and profit shifting project. In the page 11, there is quite a big example. So imagine there is an online corporation which has a resident in the country R. Let's imagine this is Links International. This is the company, or Links Apparel. In our case, this will be easier probably. That sells goods through an online platform directly to customers in various markets, including country S. So country S is Savasana country. Online corporation has also an office in country S, which is staffed by 15 people. And these 15 people are engaged in the collection of information from online corporations customers in the country S. So the representative office, this is the pure role of the representative office of the case in hand. According to the analysis provided in the case, the business activities carried on by online corporation and the office constitute complementary functions that are parts of a cohesive business operation. And the office should constitute permanent establishment in the country S, as long as the activity of collection information is substantial and crucial for the whole activity of the group. Another example, which was provided by one of the judges present today, the author of magnum opus, The Basics of International Corporate Taxation, Vladimir Alexeyevich Kidilim. Vladimir Alexeyevich refers in his work to an example, to the case of Bloomberg. This is a case based on American and Russian TTT. If I will shortly just present the subject matter of the case. Bloomberg is an American analytical agency, you should know that, which is engaged in producing databases. There was a representative office of the Bloomberg company in Moscow, and the employees of this representative office were engaged in collecting information, which then became part of the outcome product of the Bloomberg Bloomberg Corporation. The question was that according to the Russian-American DTT, the activity of collecting information was included in the list of activities that did not trigger the existence of permanent establishment. So that was the question, was there a permanent establishment or not? The court decided that the representative office in Moscow was permanent establishment of Bloomberg Company because all the activity that the employees of representative office were engaged in was a substantial part, a crucial part of the whole activity of the company situated in America, of the Bloomberg Company, while collecting databases and providing the outcome product. Another interesting case that I would like to provide is an international case, a case based on the DTT between India and Singapore. This is a recent case which dates from March 2020. The facts are, so there is an appellant, a Singapore company, which has an office in India. And this office in India is its representative office. The representative office situated in India was fully engaged in market research. We can assume that market research normally concerns collecting information on customers and consumers, because talking about market research in a certain regional market, I try to invent or assume what other activities may that include, and I came to the decision to, I made my mind that these are collecting information. So the office situated in India was engaged in collecting information, and it has 6 employees which were engaged in market research, and the court actually decided that there was a clear correlation between the business of the company situated in Singapore and the activities of the representative office in India. And that's why the business of the representative office and the business of the company in Singapore were considered core activities, and they were substantially related to each other. So that's why the court decided that the representative office in India was actually a permanent establishment of the company situated in Singapore. That were all my examples they could provide you in order to understand the nature of the representative office as a permanent establishment in our case. So I would like to underline that the activity of representative office is vital in this case. Lynx Apparel has nothing to do with the activities of representative office. My colleague would proceed with the argument.
Yes, thank you very much, Your Honors. Even if the court decides otherwise, decides that no permanent establishment was created, in this way we would discuss the second argument, that there was no business ground for royalty payment. But first, please let me point out some ideas that were mentioned by the other company. The claimant maintains that IP rights are within the scope of RMI agreement. The details of the case give no explanation to this thesis. We suspect that the party is intended to mislead the court. The RMA is an agreement to provide marketing services. All the agreements that deal with IP rights, as far as I understand, they are not called marketing services agreements. And according to the information that we have in case, there is no substantial information to understand that the subject matter of license agreements that were replaced in the year 2018 by RMA and IMA. Actually, RMA consists any idea about the IP rights. The second point that we would like to point out is the idea of adding new documents to the system called SharePoint. According to the information related to the case, we know that the only entity that can add or delete the information from SharePoint is the Links International company. So we cannot understand the source of information, why the applicant is using these data. According to the nature of the SaaS and generally the SharePoint, SharePoint as a real program, which is developed by Microsoft. Your honors, let me introduce the system in which the SharePoint is distributed via between the companies all over the world. This argumentation is based on the license agreement, typical license agreement provided by Microsoft, which is valid all over the world. This is especially stated on their website. The idea is that the only entity that can sell the access to SharePoint, so provide the hosting services on the commercial basis, is Microsoft itself or the companies that are entitled by Microsoft to fulfill such kind of applications. As for our case, the claimant pointed out that the access to RMA, the access to SharePoint is a part of RMA agreement. Still, we want to point out that the idea is that it cannot be on commercial basis. This is mentioned in the license agreement of Microsoft. And I hardly doubt that Links International would violate this agreement because they are using this software, and this software, as far as I understand, is relatively popular in big corporations. The next issue is related to the usage of software called SharePoint. The applicant team has a pretty dubious relations with this program. First of all, they mentioned that it's like cloud storage and it is an easy to use thing. But after a couple of minutes, they claim that SharePoint is very complicated and they need specialists in order to run this system. In this way, we cannot understand whether the applicants do understand the way SharePoint works. The next issue is related to the concept of know-how and concept of commercial experience. According to the commenters to the model convention, commercial experience should be considered as a know-how concept, and know-how shall meet following criteria, such as generation of economic benefit, as industrial, commercial, or scientific character, as substantial link to the previous experience, or such information should remain unrevealed to the public, including confidentiality provisions. As for our case, discussing the business activity of Links Regional, Links Apparel, and Links International, what is the source of this commercial experience, of this know-how? The applicant team mentioned that Links International has no idea that Links International is not entitled to provide with the information related to the OOM region or the Savasana as the country, a part of this region. As for Links Apparel, this is a marketing company, and I hardly doubt that it can have special information related to the business activity. Then the only factor that can really influence the activity of Links Apparel is the representative office located in Savasana. As the activity of the office is a crucial part of the Links Apparel, the whole plausible commercial experience that Links Apparel might have should be deemed derived from the representative office, which makes it a permanent establishment. This is our argument. Thank you very much. And now my colleague, proceed, please.
Your Honors.
Please, may I just make a statement? Will you give me a second? I would like, once again, just to underline the idea of my colleague. We insist that the representative office is the permanent establishment of Links Apparel, and if there were no representative office, there would be nothing for Links Apparel to deal with. So it could not provide its services. There would be no functions of the company. But since the court has offered the parties a possibility to make a draft of settlement agreement, we would like to provide our draft of the settlement agreement. We do not argue that Links Apparel does meet limitation on benefit tests. Then we would like to offer the applicant the following possibilities. We admit that Links Apparel is the beneficial owner of the money that it becomes from Links Regional. We do not consider then representative office as permanent establishment, but the applicant will pay us will pay the tax authorities 5% of the whole dividends received from Links Regional, and all the monies that are now claimed to be royalties will be dividends, as long as there is substantial activities of Links Apparel without a permanent establishment.
Your Honors, as for the court decision related to this settlement agreement, for your convenience, we would provide you with the draft of such kind of agreement. Could you tell us, please, may we upload this Word file using the chat of Zoom conference? So you could download it and check it or comment it.
That's a question to the administrator and secretary of the court, if there is a technical possibility to do that. But while this question is being resolved, is there anything else you want to say on the substance of the case?
Yes. There is still one argument, please.
Yes, Your Honor. So I would like to say some words about application of domestic anti-abuse rules. So according to paragraph 1, article 2223, and paragraph 2, article 9 of commentaries to Model Text Convention, substance over form and economic substance and general anti-abuse rules are part of the basic domestic rules set by domestic tax laws for determining which facts give rise to a tax liability. These rules are not addressed in tax treaties and are therefore not affected by them. As a general rule, there will be no conflict between such rules and the provision of tax conventions. It is also clear that no conflict will be possible since the relevant domestic general anti-abuse rule will apply in the same circumstances in which the benefits on the convention would be denied. The vast majority of the countries did agree to application of this rule. Only 6 countries were against the application of domestic anti-abuse rules and claimed about its contradiction to DDT. Moreover, all of these 6 countries are European countries, while Asana and Savasana are likely to be located in Asia, near India, and the country and India did agree to application of domestic anti-abuse rules.
So thank you, the court, for your attention. Now we have finished with our argumentation.
Okay, I think I know that the question about the settlement agreement is being processed, but in the meanwhile, I would like to give the floor to the claimant to ask the questions to the defendant, if any.
Your Honor, yes, we have questions. We would like to ask tax authority if Links Apparel performs active business in Savasana, it would perform it with its representative office. Why does the tax authority ignore the difference between active and passive business transactions when claiming about permanent establishment of Links Apparel? And what are the criteria of permanent establishment if Links Apparel really meets them in our case?
Thank you for the question. Well, actually, there is no such link there is no such link that you talk about. So actually, the existence of permanent establishment is not related with the active business of the company. If the company does meet the limitation on benefits test, it doesn't mean that it cannot have representative office. Links Apparel does meet the limitation on benefits test criteria as long since it's is engaged in active business, but only due to the company, to the regional company that is situated in Savasana region. So this is the only region. This is the only criteria one Links Apparel may be considered an active company. But still, the criteria of the permanent establishment, which I have already mentioned, is the place of business, which should be fixed, and there must be business activity carried on in this permanent establishment, which will be essential and vital for the whole activity of the group of the companies. Thank you.
Any more questions from the claimant?
Yes, we also would like to ask tax authority one more question. It's about the grounds why tax authority thinks that there was some dividends, and why can tax authority explain why do they qualify the payments as dividends as they just challenge the beneficial owner of Links Apparel? The services and IP rights are still provided to the taxpayer, and both Links International and Links Apparel reside in the same country. So there should be used the same DTT and same tax treatment, even if Links Apparel is not a beneficial owner of such payments.
Which is not the case.
I should mention that in case of services provided by Links Apparel, which is, to our mind, is not the case, but if the services are provided by Links Apparel, whether Links Apparel is the beneficial or not, there is actually no difference for us. The only difference between the beneficial owner status is relevant for you in case you pay dividends, because since the ownership share of Links International and Links Apparel in Links Regional Company, which is tax resident of Savasana region, is different. In case Links Apparel is the beneficial owner of the payments, according to the Article 10 of the Model Tax Convention, which concerns the topic of dividends. The rate of the dividends, of the whole dividends paid, will be 5%. In case Links International is the beneficial owner of the dividends, the tax rate will be 15%. So that is why actually our settlement agreement was based on the acknowledgement of Links Apparel as a beneficial owner of the dividends, because this may be the our common point, our common interest. This will be more lucrative for you, and still we do recognize the beneficial ownership of the Links Apparel company, and we get the dividends due to our country.
But that is not the answer to the case. The answer was, why would you reconsider the royalties paid under the RMA to dividends? You answer that if we prove that the beneficial owner was erroneous, then we should prove that there were dividends. So you should prove one thing in order to prove the other.
You will have your time for a debate. The question was asked and the answer was given.
I'm sorry. Then just last question, please.
Yes, you have a last question.
Thank you, Your Honor. There are no digital services or software selling. Why does the tax authority substitutes form of documents provision with a completely different type of services?
Could you please repeat the question? I didn't catch the question.
Why does the defendant substitute form of documents provision with a completely different type of documents, of services?
Excuse me, I do not completely understand your question. The idea is, so we claim that there is an agreement under which one party receives the services from another party. The transfer of documentation is actually has to deal with the subject matter of this agreement according to the circumstances of the case. We discovered SharePoint as one of the possibilities, as actually the only possibility that was discovered as the subject matter of this agreement. As for SharePoint, we considered the possibilities of usage of this program, because you cannot use the you cannot transfer the software without using, you cannot transfer the information without using of the special software. As for the software, you cannot, you're not entitled to resell it even within your group. That means that we pointed out that considering different potentially commercially significant parts of the cooperation between Links Apparel, Links Original, and Links International, the idea of SharePoint usage cannot be considered as something really money-bringing due to the license agreement.
Thank you.
Thank you. Then I think the court will proceed with its questions. And I will ask the first question from my side. You opened your case with thesis with argument that the rep office is a permanent establishment. Have you made this statement in the in your written statements?
No, we haven't.
Okay. Then also the question as to the content of your settlement agreement. Did I get it right that the substance of your proposal is that Links Regional pays 5% tax on the entire amount of royalties paid to Links Apparel, being treated as dividend and taxed at the lowest available rate under the treaty? Is this the nature of your proposal?
Thank you for the question, The nature of our proposal is that the company, well, yes, it is right. The Links Apparel company will pay 5% tax on the royalties paid, which are requalified by the tax authority, which are deemed dividends. And yes, it pays the tax to the tax authority of Savastano country.
At the lowest treaty rate?
Yes, due to the share of the interest of Links Apparel company in Links Original company.
Okay. And can I ask you to clarify for the court the link between the argument that rep office is a permanent establishment and the reason why we should treat royalties as dividends.
Of course, Your Honor. The idea is that the Lynx Apparel Company has its own real duties or its real functions. All the functions that are performed by Lynx Apparel Company, which is claimed to be the beneficial owner of the royalties paid for its performed for the functions performed claimed under the agreement. They all exist only due to the fact of existence of the representative office in Savasana region. So that's why the permanent establishment is the representative office is permanent establishment. If there were no permanent establishment, there is no substance or functions of Lynx Apparel Company. That's why, since it doesn't provide real functions, or at least the role of its functions is quite ambiguous, it cannot be commercial experience as it claimed by the claimant, by the appellant. There is no commercial experience received. There is no commercial experience owned purely by the Lynx Apparel Company. That's why the payments made by the Lynx regional company to the Lynx Apparel Company cannot be considered royalties, since there is no subject of royalties.
And what makes it dividend? So you deny the qualification of the payment as royalty, but what makes you think it's a dividend?
Will you please answer the question?
Well, first of all, the idea that the dividends as the burden distributed by the company, although it was profitable. This is the first mark that attracted our attention by considering the transactions within the group.
Could you please show the presentation in order
sure.
to make it clearer?
The second factor that attracted our attention is that the consideration of RMI is related to the annual revenues of Lynx Regional. And this is the second factor that related our attention, the percentage.
So the idea of a qualifying royalty payments and dividends is that is actually made on assumptions which are made on evident facts. And we would like to represent you that facts. We know that Lynx Regional was a profitable company in the years 2018 and 19. And that's why we ask to requalify the payments also made in form of royalties in these years, because we think that these payments were dividends. Since in the year of 2017, the license agreement was replaced by marketing agreement, which purposes were not really clear because there were no presenting of IP rights of the trademarks. The substance of marketing agreement is unclear, and we think that these payments in form of royalties were deemed dividends. And let me explain then why. So these payments made in so-called form of royalties to Lynx Apparel are then accumulated in this company. And then there is a peculiar question arising. There are two companies, two shareholders, almost equal shareholders of the company. Lynx Apparel pays only 5% and 5% of the whole on the whole income of received from the OOM region, some from Lynx Regional and 13 subsidiaries from that region. It pays these royalties to Lynx International, but this is not a big amount of the money which are accumulated in Lynx Apparel. This is less than 1%. If Lynx Apparel has no real functions or real duties to perform, since it has no commercial experience as claimed by the appellant, where does this money go then? It is accumulated in the company, which purpose is unclear. There is one other option, which is also made on, unfortunately, on the assumptions because of the lack of information provided in the subject matter. We have information about Links Regional that this company did not distribute dividends, but we do not have the same information about Links Apparel company in our subject matter. So that's why we can presume that the dividends were distributed to Links International and Links Free for All.
Sorry to interrupt you, Counsel. Do we have, is this follows from the facts of the case that the funds were equivalently distributed up to the Links for All as well? Because the question, what I hear from you, Counsel, is that we're following the logic that the royalty payments are in fact the hidden dividend distribution, or should be requalified as you so call that. But nevertheless, what I understand is that the funds are effectively being transferred directly to Links International. That's the first thing. And the second thing, the royalties are calculated based on the sales, but not on the profits in the region. So how can you claim that the effectively profits being distributed from the Links region? Because the sales might effectively have zero effect or even negative effect depending on the company. Can you elaborate on that, please? Thank you.
Your Honor, let me divide your question in two little groups. The first of all is related to the advisory organization, Links Free for All. Unfortunately, the information, the volume of information we have is limited by the information provided within the case. That's why we have generally no information whether the money was distributed between Links International and Links Free for All or wasn't.
However, nevertheless, you requalify the whole amount of royalties as dividends. Is that your statement? Whereas you deem that you are uncertain regarding the whether there was a distribution of dividends further on. So you have to be sequential in your conclusions. I mean,
the reason of recall. I'm sorry, Your Honor. The reason of requalifying the nature of royalties paid to Links Apparel is actually the further ambiguous status of these payments, and since there is no further information provided, we may assume that these payments are further dividends. We have no information whether this money goes to the fund, but this may still be dividends to Links International. Moreover, we have a common practice from different states such as United Kingdom, Germany, France, well, even Ukraine. In these countries, the dividends paid within one group of companies, and including the parent companies, is not subject to the state tax. So that's why this may be considered as a tax evasion.
Counsel, you're misleading the bench. You are providing the examples of the cases of the dividends qualification, but are there any, let's say, case practice you might be aware where, for example, the royalties, maybe Russian court practice or maybe other jurisdictions where royalties were effectively qualified as dividends? And what was the test in that particular cases, if you're aware, of course? Thank you so much.
I'm sorry.
Sorry, excuse me, Your Honor, let me correct.
Please, can you give us I mean, are you aware of any examples in a case practice on international tax cases where even domestic courts qualified royalties distribution as hidden dividends distribution?
I will kindly ask you for just a couple of seconds for my colleague to look through our materials. But first of all, let me please a little bit underline your position, considering the money that actually requalified as dividends, and make a little bit comment and comment a little bit on the idea of the volume of information we have. May I?
Yeah, yes, please, because we really assume that we agree with your position that indeed this is the dividends distribution, but what we are really, me and my respectful colleagues are looking for, let's say, exhaustive or let's say explicit test that you apply with regards to dividends. So we qualified but certain this test is applied. So this is why we really like to understand, because what I also see, even though assuming that we agree with you, I see other, let's say, the flip side of the coin, that the royalties depend on the sales amount, and there is uncertain, let's say, further nature of the dividend of the royalties payment, and whether they in fact let's say been distributed or even maybe taxed as a profits. So this is something just to understand your view on the test that you apply.
First of all, the idea was that we did not requalify the whole sum as if-deferred dividends. The concept of tax authority was to provide the to requalify only that money as if it was a profit. And in this way, we do not take into consideration all the money that was transferred between the companies. Moreover, let me point out that that our proposal, considering the settlement agreement, the percentage rate that we offer is relatively low, which underlines that we are interested in complete and just audit. And in this very way, we are looking for compromises as well. About the case law.
Yes, Your Honor, I would like to proceed my argumentation. The practice of qualifying royalties and dividends is quite common, not only in Russia, but in other countries. But in Russia, this practice is quite, I would say, often. And one of the cases is the case of Farmacentr Velar, ZAO Farmacentr Velar. The company had transferred trademarks to the physical person, to the person, and then paid royalties to the person, to this person. But tax authorities challenged challenged actually the nature of the royalties paid under the agreement, saying that there was no economic substance in providing trademarks to the physical person, and the paid royalties were actually deemed dividends. So that was the reason. There is no requalification, since there were no economic substance. The paid royalties were deemed dividends.
I have a couple of questions, unless Nikolai would like to continue.
Please.
Okay, so my question is this. I have a number of questions actually to the tax authorities. I will divide my questions in two groups. First, relate to your qualification of facts, and second, relates to your judgment. So as for the qualification of facts, I'm referring to the factual documents that were provided to the judges. As for the representative office, the facts are saying, in addition, Linked Apparel has a representative office in Savasana, which conducts research activity, gathers information on potential customers. So I did not hear in your presentation any proof to the contrary. So I guess the court would rely on the facts of the findings, because there is no other facts provided. You did not say that the employees of the representative office, let's say, solicited transactions or were engaged into negotiation of contracts. You described various statements relating to the BEPS Action 7 and artificial avoidance of the PE, but to be honest, I did not hear any argument or any fact that would prove that the representative office was actually a permanent establishment. So would you kindly provide the exact evidence and proof that the representative office was indeed a permanent establishment and did not fall within any exempt activities catalog? This is number one. The second question that I have as to the facts, I'm referring to your statement that you presented to the court, which corresponds to the акт налоговой проверки and to the decision or resolution of the tax authority relating to rejection of a treaty claim. So the substance of this case is that you deny the withholding tax exemption and royalties based on the treaty, right? So let's go to the roots of your of the entire case that is being heard by this court. So in your statements, you are saying, and I'm citing, that Lynx Apparel is a shell company, which is controlled by Lynx International Management and which financially depends on its parent company. Lynx Apparel deals with a part of Lynx Group money flow in order to avoid withholding taxes on the territory of Samasana. Marketing services or other activities are only a cover for aggressive tax planning of the Lynx Group. So I would kindly ask the tax authority to prove each statement that you are claiming in your motion, in your presentation. First of all, that it is a shell company, so please introduce the concept of shell. Then secondly, you are stating the purpose of establishment of Lynx Apparel, that it deals with part of Lynx Group money flow in order to avoid withholding taxes on the territory of Samasana, and other activities are only a cover from aggressive tax planning. So please introduce the concept of aggressive tax planning and to provide exact proof based on facts of your claims, because if you don't present any proof, then the court would likely dismiss any of those arguments as being non-substantial. Finally, in terms of facts, I would like to pay attention so that the representative of the tax authority pays attention to the various descriptions that were provided in the facts to the court. In particular, the following statements that must be assessed by you, and you must provide a proper judgment to the following facts, again, that were presented to the court. Let me give a couple of citations from the facts for your attention, please. Within the group, Lynx Apparel performs multiple and complex functions, owns various assets, bracket open, commercial funds, different types of fixed assets, receivables, etc., closed, bracket closed, bears and manages various risks. In particular, Lynx Apparel is responsible for marketing strategies and development of the markets for the brands Lynx and Nisha in OM that is realized through provision of marketing and merchandising services. Lynx Apparel has about 40 employees. Senior management personnel of Lynx Apparel are partly represented by Lynx International employees. Lynx Apparel performs regional consolidation, in particular relevant business and executive decision and coordinating functions, maintains staff and office. Next, Lynx Apparel employees provide answers to questions in relating to marketing documents, or find an employee of Lynx International who can help Lynx Regional with the issue. Also, under that scheme, Lynx International annually delivers marketing strategies. Lynx Apparel is used as a regional marketing hub for delivering the strategies and controlling their fulfillment. On a monthly basis, Apparel reports the progress made by entities within the region to Lynx International. So I would like to point out that whatever I just pronounced is not the response of the claimant and not part of their statements to the defendant. This is the fact pattern provided to the court. And unless the tax authority provides a rebuttal or a rejection of each of those facts, the court cannot accept your claim that Lynx Apparel is a shell company that was created with the sole purpose to avoid withholding tax and part of the aggressive planning scheme. So please provide evidence rejecting all the facts that were described with a particular proof for documents. Did you provide interviews with staff? Did you receive any evidence that there is no employees, in fact, that there is no office, or what? because I see a huge logical contradiction between your statements, which you provided to the court, and the facts that were provided to the court. So please comment on two issues. First, why is the representative office a PE? Please prove this, because you claim this. You must prove. The burden of proof is on you. Secondly, please prove that the Lynx Apparel is a shell company that was interposed with the sole purpose of avoiding withholding taxes and was part and is only a cover for aggressive tax planning. Please provide exact evidence and proof to your facts, to your claims. Thank you.
Sorry, may I jump in and add something from the argumentation of my colleague? In my real life, I'm at the business faculty, and I'm a bit concerned that you have not considered, say, the value creation of a marketing strategy. So the representative's office is collecting consumer data, okay? Data, consumer choices, preferences in a local market, and then this information, the data, say, is extracted by 8 employees in Lynx Apparel. And, you know, a marketing strategy then may be based on you know, exploiting the data by artificial intelligence and so on, and then develop a strategy about pricing, advertising, and so on. And as my colleague, I see this economic function, the people's function in Lynx Apparel. There are 8 employees. They're using the software, the Microsoft software, okay, for data analysis, and so a marketing strategy is not simply a brand. You know, it's an advice, you know, how to price, how to offer products. And so I just wanted to add that, the value creation, because collecting data and developing a marketing strategy, so this is the data collection is really an auxiliary activity.
Thank you, Your Honors. I will start argumentation considering the question about permanent establishments, and then my colleague will proceed with the argumentation considering the real functions of Lynx Apparel Company. I may have misunderstood the opinion of the judge, but we haven't actually tried to prove that the representative office had any other activities of collecting information. That was our point, that the representative office collects relevant information in the Savasana country about potential customers of the Lynx Group companies. Since normally the activity of collecting information falls within the exemption of Article 5 of the Model Tax Convention, I have provided several examples when such activity may be considered as an activity of permanent establishment. So according to the commentaries on Model Tax Convention, Article 5, Paragraph 4, the decisive criterion whether such activity may trigger the existence of permanent establishment is a central and significant part of activity of the enterprise as a whole. So let's imagine that not just imagine, these are the facts. Lynx International provides provides footwear, so it obviously has to know about the preferences of its end customers in several countries, which are all situated in our home region. There are several subsidiaries, several countries, and one of these countries is Savasana country. So eventually, it has to become relevant information about the preferences of the customers. And this is actually the activity of representative office. Since the activity of representative office is of significance, and there would be no information to deal with for Lynx Apparel, if there were no representative office providing such information, Lynx Apparel would be just a company without any duties. That's why representative office and its functions are relative and important for the whole group.
But I'm sorry, but you're making claims that are contrary to the facts. Sorry, the Lynx International, sorry, the Lynx Apparel does have office and does have employees, 40 employees in general and 8 employees specifically for marketing activities. And the representative office is sourcing the data. And then your reference to the anti-fragmentation rule of the Model Convention, paragraph 4.1, is basically to deny the application of the exemption. So there must be a logical sequence. If you are stating that the representative office is a permanent establishment, then you need to prove that. So far, the facts were given that the representative office is only sourcing information. So either you present the proof or you please withdraw your claim, because the reference to the anti-fragmentation rule is to say that other related or closely connected entities would also maintain a place of business in that jurisdiction, in the Savasana. Because basically what you are saying, yes, Lynx Apparel is doing a related activity, but in which jurisdiction is it doing this activity? Is it doing activity in Asana or in Srivasana? So there must be a nexus. For the permanent establishment, the foreign enterprise need to perform business in the source country. If the foreign company is performing the business outside its home office and just has a representative office that sources data, then there is no permanent establishment. So please prove that there is a permanent establishment, provide evidence. And secondly, as Alexander also asked, please provide a causal link between the recognition of permanent establishment and the rejection of the tax treaty claim. So please maintain the entire storyline logic. So first, please prove there is a permanent establishment. And if there is a permanent establishment, then why are you claiming this? What legal relevance or what importance is the recognition of a permanent establishment? Are you trying to say that the royalties are attributable to the permanent establishment and that's why you are rejecting the claim? Or what is the causal link? Because to be honest, I'm lost in the logical sequence of your arguments.
Thank you, Your Honor. The representative office shall be deemed permanent establishment because its activity conducted in the Savasana country, and it states in the matters of facts of the case in hand that 40 employees they spent significant time collecting information, collecting data in the Orum region in order to provide it to Lynx Apparel. And so this is a substantial function. This is a very a vital function for the whole group in order to provide their activities. And what concerns the shell company status, the shell company argument was actually not, the term was not actually correct, chosen by the tax authority. It was used in order to well, it was not actually correct, because naturally Lynx Apparel has offices, has funds and money. It is not a shell company, but since all the activities that Lynx Apparel provides are based on the researches that are made by the representative office. If there were no representative office, the status of the Lynx Apparel company is ambiguous. We have no understanding of the nature of functions provided under the agreement between the Lynx Regional and Lynx Apparel in case there is no functions of representative office.
Is there any evidence, for example, that the employees of the representative office are engaged in the RMA, for example, like in any commercial activity? Because you are saying you don't have information, that then if you don't have any information, I would wonder whether you did an audit and what's the quality of your audit then. You cannot make a let's say, an assessment of tax or rejection of a treaty claim based on assumptions. So I would say that if there is evidence that the representative office employees are not just sourcing information, but engaged in active conduct of commercial activity, like, for example, the RMA agreement, like, for example, they're providing marketing services for a consideration, then the revenue and profits from marketing services should be attributable to the PE. And then you would reject the withholding tax exemption based on paragraph 3 of Article 12 of the treaty. So you see my logic, yeah? You see my point. So the Article 12 of the treaty says royalties are exempt in the source state, but royalties are taxable, and the paragraph 1 doesn't apply if the royalties are attributable to the PE in the source state. But so far, I do not see any proof that was issued by you from your statement that the royalties are actually attributable to the source state. So is there any evidence? Please provide such evidence.
Your Honor, you've actually mentioned that we have to prove that the actions of the employees of the representative office, well, they should be somehow engaged in the RMA agreement. The point is that they are not directly engaged in this agreement, but this is not based on our assumptions, but on a consequential analysis and decision. Since Lynx Apparel is engaged in adapting global strategies provided by Lynx International for regional markets, it should base its adaptations on the information which it becomes from these regions. In order to adapt the global information, one have to have some information, some particularities, some expertise relevant to the particular region, to the particular country. This information is provided by the representative office. So that's why the provision of this information, the collecting of information, is actually active business. In such case, this is active business of representative office, because only due to these activities, Lynx Apparel may further adapt the global strategies provided by Lynx International.
And the relevance of Bloomberg case, just to continue on your storyline, the relevance of Bloomberg case is that in Bloomberg, the employees of the rep office were also kind of getting data about the local market, uploading the data into the Bloomberg information system, which was sold to the clients in Russia, to the banks, right? So you are basically creating a link between the sourcing of information from the local market and providing services which would represent the main business of the foreign entity. And this is the basis of rejection of your claim. Do I understand it correctly?
Yes, that is right.
So just use simpler language. Let's use simpler language. What is the main business of Bloomberg? It's providing commercial data against a fee, okay? Auxiliary preparation activity exemption can only be applied if it is used by the entity in the home jurisdiction, which is not coinciding with usage of the same data for the purpose of commercial activities, right? For example, imagine that you are a producer of wheels, of automotive tires, and you open a rep office to source data about the rubber market in the source jurisdiction, right? You buy rubber, then you produce tires and sell your tires. But do I understand you correctly that if you are a business of providing marketing and information services, this is your main business, then if your employees in the rep office are engaged as part of this business, if sourcing data, then the enterprise cannot claim an exemption under paragraph 4 of OECD Model Convention. Do you want to say this argument?
No, we do not want exactly this argument, because Lynx Apparel itself does not sell anything. It provides marketing services to another company. At least it should provide these marketing services. It does not sell anything. It is not engaged in selling.
No, I mean selling marketing services. Selling marketing services. Their business is provision of marketing services under RMA for a fee, right? So I'm just trying to make a logical kind of restatement of your argument. So let's look at the facts. RMA, Links Apparel is in the business of providing services and providing IP, because their business is based on the RMA, which is the regional marketing agreement, right? So what Links Apparel is doing is providing services to subsidiaries. And obviously they collect fee for that, which is 7% of revenue. And then Links Apparel has a representative office. And the employees of that representative office are basically getting the data that the head office is then using in its services, isn't it? So that was exactly the Bloomberg case. So I'm just trying to kind of to make your argument clearer. To make your argument clearer. What is exactly the relevance of Bloomberg case to this particular fact? So please, can you elaborate?
Your Honor, if it's possible, may I point out some specific parts of the marketing services which are provided worldwide, and actually the substance of these services in general, maybe on more theoretical level, but still. In this case, we have to deal with a company, the aim of which, generally, the group of companies, the main aim of which is to manufacture and to resell the consumer goods. But as for the consumer goods market, it is a crucial information. What are you going to sell, and who is your client, who is your customer? In this way, the exact information about the traditions of the market can be essential. Can be essential for the operating business of the whole chain between the discovered companies. The opposite party also mentioned that Links International, as the head company, does not deal with, does not have any real access to the information about the region. And in fact, that's why we make a conclusion that the only real source of information for Links Apparel, by providing the marketing services, is the information about the potential clients received by the representative office. That's why we consider the representative office as a permanent establishment, as the business activity of this company is crucial for Links Apparel, and then as a conclusion for providing services, marketing services. I mean.
Your Honor, as to the relevance of the Bloomberg case, what we were trying to say is that in this case, yes, Bloomberg case is very relevant, since we're not speaking about Links Apparel, Links International, but we're speaking about Links Apparel, and these are the activities of Links Apparel are not actually selling or reselling products. They are merely analytical. These are analytical functions. Well, they provide services. However, they provide services with adapting global strategies. This is the function. So that's why the Bloomberg case is relevant here.
May I add again? Bloomberg collects data from the financial market, and that's their essential product. And of course, for such activities or for newspaper, data collection is an essential activity. But not, to develop a marketing strategy. It is about the choices of consumers. Yeah? What are their preferences? So you observe, do they prefer online activities, or is it necessary to offer the products of Link Regional in nice department stores and so on? And this is an auxiliary activity, and then the strategy you know, this is not simply a piece of paper they hand over from Links Apparel to Links Regional. They extract the data, and then they come up with a strategy about, you know, pricing, maybe a specific design, a country-specific design of certain products, the color of, I don't know, shoes or something like that. What are the preferences? And that is developed in Links Apparel, and that's completely different from the business model of Bloomberg, so, or you know, newspapers, and that's also mentioned in the OECD commentary. What is an auxiliary activity? Data collection that depends, you know, on the business model, and I consider Bloomberg not as relevant in the Links group's business model.
Please, you want to let me comment on your point. I would like, first of all, I would like to provide you another case law relevant to the cases with newspapers and journals and, well, such activities. You have mentioned that the research activity, the collection information, would trigger the existence of permanent establishments if these activities are provided to, let us say, to a newspaper, to the office of a newspaper. In the case of a newspaper, this was a German case. The head company had several offices in different countries. In France, in the United Kingdom, there were several offices, and this company was interested in recognizing these offices permanent establishments in order to make deductions. But unfortunately, the tax authorities didn't allow it. They did not recognize the functions of these permanent establishments of pure collecting information for the newspaper as triggering as activities triggering the existence of permanent establishments. Because for the newspapers, it is always relevant that these offices not only collect the information, but analyze this information. In our case, well, as long as we are not allowed to add any information provided to the case, and since we have the only information we have about Links Apparel is that it adapts the global strategies of Links International, we do know any means through which this is made, but we can assume that, well, just let's imagine this, how this functions in reality. Links Apparel has 8 employees, only 8 employees in order to adapt global strategies of Links International for several countries situated in all regions. Since you have an example.
Sorry, may I interrupt you? You know, the R&D activity, say, or the activity to develop a marketing strategy is to analyze the data. Say you need some people, you know, applying artificial intelligence. You know what that is? That is an algorithm, okay, in order to, you know, to come from data to value. And that strategy is performed, as the case is described, at Links Apparel. And so you could also try to approach to this issue in a different way. So if you recognize the representative's office as a PE of Links Apparel, then Links Apparel would be subject to limited liability to tax in Savasana. And what is the profit you would allocate to a PE which is simply collecting data? Again, that is maybe you could say, okay, it's a cost plus remuneration because the collection of data does not contribute to the value creation. I'm very sure about that. It's just the starting point, okay, and then it is really extracted, and that's therefore we need the software and so on. So that's, I find it's described very well in the case description. What is, you know, the product Links Apparel offers to the various subsidiaries, the local subsidiaries.
May I add to Christopher's point that, here that I'm looking at the description of the statement to the court of the tax authority, and they're saying the following: there are 40 employees on Links Apparel, but only 8 of them have access to SharePoint. Only 8 out of 40 employees work in the system. Apparel provides services not only for Links Regional, but for the 13 subsidiaries as well. That means that 8 employees can cater 14 companies. Okay, just very roughly, 8 employees using sophisticated software like, let's say, Thomson Reuters, like Factiva, Bloomberg, and others, 14 companies. Okay, imagine one employee has 2,000 working hours per year. So each employee handles just 2 companies. Why do you think that 8 employees cannot cater 14 companies? So just from a rational perspective, I see absolutely no problem in that fact that 8 employees are catering 14 companies. These are all group companies. They are responsible for 14 markets, and one employee just handles 2 markets. How can it be that you don't think it's logical for one employee to spend 2,000 working hours per year just to handle 2 markets? It's perfectly logical. Where is the disconnect here?
Your Honor, if it is possible, let us comment on each of your statements step by step. The first one is we should comment on the concept of using a high-tech of artificial intelligence and etc. that was mentioned above, but we still did not have ability to comment on it. We respect the ability of the party to use the most modern technology, but still we have to, as the tax authorities, we have to be strictly within the information which was provided by the information within the case. And unfortunately, there is no information related to usage of such sophisticated technologies. Moreover, let it be my own opinion, but still, we discussed the situation since the year 2018. And as all these modern technologies are rushing and the development tempo of this is enormous, maybe in this way these high-tech methods are not applicable even for example, 2018 or 2019. That's why it is impossible for us to deal with this sort of information. Then, as for the state authority, the most representative factor is still the number of employees, because the numbers of employees, because hiring an employee makes a company deal with higher standards of proof which are imposed by the labor law. That's why, from our position, such company can look more reliable or more well, let's be more reliable. And when the company is using other methods or other technical or human powers, first of all, we do not know about it concerning the case. And second thing, unfortunately, hardly can we prove it using the information we have. As for the situation related to the PE and the representative office, and also the general number of employees. Here, we would like to refer to the nature of marketing services. The idea is that Links Group exists in such a part of market which is some sort of, I would say, Links Apparel exists in the marketing sphere for the consumer goods, and these goods, the market of such, this market of such marketing is known for being pretty volatile, because there are many trends, there are many platforms when a company shall promote its own products, decisions, or general policy. For example, I think hardly have you heard about some strange social networks like TikTok or, for example, Instagram 10 or 15 years ago. And all these new trends replace the older ones. That means the marketing employer, the professional marketing employer has to be always in trend and always and constantly adjust the whole marketing system to the needs of this client. Because let me repeat it again, the market of sports clothing, of sports footwear is a market with very high level of rivalry, and with the market when many customers have an impression and make decisions based on impressions. That's why the marketing company shall always be adjustable. That's why the year, the calendar year, or the year calculated into the working hours, unfortunately cannot duly represent the real approach of a good marketing company to its duties. As for representative office, the main idea is that collecting this data from the exact market is this special adjustment that a marketing company needs in order to be successful and to provide its services in the best way.
Moreover, just to add to the position of my colleague, there are several countries. For example, there are 14 subsidiaries, and each subsidiary in each country. So there are 14 countries where subsidiaries are located, and only 8 employees that are working and, as we suppose, maybe that are working and adapting the strategies and the information from this company. So this is very unusual, and as for our position, it's impossible to adapt and analyze all this information.
So we would like to finish our answer.
Yeah, am I asking just a few final questions, just to be clear for all of us? Are you agree that the mere fact that Lynx Apparel has a representative office in Russia emphasizes that Lynx Apparel acts as a service provider and actually that renders some services?
Could you please repeat your question again a bit?
I agree that the mere fact that Lynx Apparel has a rep office in Russia, which, as you stated, performs substantial activity and so on, states that Lynx Apparel actually renders the services in favor of Lynx Regional.
Our point is that if there is permanent establishment, then yes, it is clear which functions and which marketing services are rendered by Lynx Apparel. If there is no permanent establishment, then it is unclear what is the nature of the marketing agreement and all the services provided.
Okay, it's clear. But in fact, maybe we missed some logic, and now we try to restore this. So the first point, that if they have rep office, and you moreover state that this rep office contributes a lot to the whole process of rendering services, that means that Lynx Apparel, in fact, rendered these services. This is the first point, right?
Yes.
So it contradicts to the second statement that Lynx Apparel might be treated as a shell company at all.
Your Honor, let me say this once again. The term of shell company was not correctly used by the tax authority in the written statement. So this statement was not correct. This is just not the correct word for Lynx Apparel company.
Okay, so in fact, you now acknowledge that Lynx Apparel actually has some functionality, right? And in that sense, it could be simply ignored for tax purposes, right? The mere fact whether Lynx Apparel actually earns this 7% revenue of Lynx Regional or not, right? This is a question which you're now trying to argue, right?
So the point is that it's actually up to court to decide whether there is a representative, whether there is a permanent establishment or not. We insist that there is a permanent establishment, but the court may decide otherwise. but there are two options possible for us. Whether there is a permanent establishment and then links apparel.
No, yeah, I understand. I understood, right? And okay, if turns to this statement that let's assume that this rep office constitutes a permanent establishment. I completely agree with Christoph that your second step should be the determination of an actual taxable base in Russia. You should be allocated to Russia from this 7% of revenue. And apart from the gathering information, we may treat it as substantial enough to constitute the PE in Russia. But in comparison of other functions which performs by Links Apparel on their headquarter level in Asana, right? How we should weight these local functions against their, other functions which performed by their team, which is located in Asana.
Well, the principle of calculating the profit of permanent establishment should be based on the cost plus principle. So the
okay, I agree. Okay.
Royalties should be attributed, and then they may reduce this profit to the expenses they have.
Okay, so in fact, your point is to recognize a taxable profit in Russia in the amount of cost plus on the rep office. So all expenses which were incurred by representative office plus some market, arm's length marginality level, that is the fair enough to tax in Russia.
Yes.
Right? So in fact, you reject your previous claim to reclassify the whole amount of royalty or some part of royalty to dividends. Now you just try to prove that only this cost plus amount should be taxed in Russia.
We just offer two options of possible outcome of the case. This is up to the court to decide whether there is a permanent establishment and there is a cost plus system. If there is no permanent establishment, then there are dividends paid to Links Apparel.
Okay, but you as a tax authority should state, right, that statement, which we as a judges should estimate. And in fact, if you state the first point that this is a permanent establishment, which has some quite minor taxable base in Russia, this is the first point. The second one, in fact, contradicts to the first one, since no reclassification grounds for this reclassification. If you acknowledge that, in fact, the mere fact that this rep office acts and contributes quite a solid portion of the whole value which generates by Links Apparel, in fact, it does not provide us any ground to confirm the second possible, way of your logic. So that is why now we are quite clear, and you now have to choose which way you finally confirm and which way we as judges should finally assess.
Your Honours, our first and main claimant and the main claim is to acknowledge representative office, permanent establishments of the country of Savasana. This is our main.
Okay, in the amount of taxable base as determined as taxable cost plus, right? Okay. Is this your primary statement?
Yes.
Okay.
I want to continue a little bit on the Gennady's point here, and this is very important. So the tax authority, please understand that the rules for application of the tax treaty or rejection of application of the tax treaty exemption follows certain principles that are grounded in international law, right? So the principles are as follows. You start always with the domestic tax law, and there is a withholding tax in the domestic tax law, right? Then you go into the treaty level and try to ascertain whether the treaty has an allocation rule or a so-called distributive rule, which basically allocates taxing rights between the states. And in case of royalties, the allocation rule of the OECD Model Convention says residence state only. It's so-called exclusive residence taxation, meaning that source state does not have taxing rights. So the taxpayer is entitled to the exemption. But the analysis cannot stop on that level. The exemption in the source state has two major conditions that are embodied in the Article 12 of the OECD Model Convention or in the actual treaty. Condition number one, that the recipient of royalties must be a beneficial owner. And in that sense, if the recipient is not a beneficial owner, or if the beneficial owner is not in the resident state, but in some third state, then the provision, the allocation rule cannot be relied upon. And the second is the paragraph 3 of Article 12, which says that if the royalties are attributable to the PE in the contracting state, then obviously the paragraph 1, which contains an allocation rule, is also not applicable. So if a tax authority rejects the tax treaty entitlement of a taxpayer, you must prove existence of one or another. As Gennady said, you cannot claim both, because either the royalties are attributable to the PE, and that's it, you just prove it, and the taxpayer, you reject the taxpayer's claim based on the allocation rule, or you are saying we do not have evidence that the royalties are attributable to the PE. That's why we go through the route of specific anti-avoidance rules like beneficial ownership, limitation of benefits, or even GAR, general anti-avoidance rule. So I would encourage you as a tax authority to make your statement very clear and logical. So what we see as judges, there is a detailed memorandum that was presented to you as a reply to the applicant's claim. And the storyline must be very clear, because the applicant said that your statement on beneficial ownership is wrong, your statement of limitation benefits is wrong, etc., etc. Now, if you never stated in your акт налоговой проверки и решение по акту налоговой проверки that there is a PE, then you would not allow the defendant, you would not allow the applicant even to reject that assumption. So how would you like the court to assess your argument on the PE if you didn't even bother putting this in the акт налоговой проверки and in the решение? Because I see nothing on the PE either in your statement to the court or in the applicant's statement to the court. So please pay attention to that. But leaving apart the philosophical argument, you just stated that there is a PE, but let's put it aside. Can you please elaborate on the beneficial ownership? Because you are still claiming in the in your statement to the court that the company Links Apparel is not the beneficial owner. That is why you reject the application of the treaty benefits to them, meaning paragraph 1 and paragraph 2 of Article 12. And then I would ask you, then if Links Apparel is not the beneficial owner, then who is the beneficial owner? Where is the beneficial owner located? And is Links International, for instance, a beneficial owner? And if so, would you still allow tax treaty benefits if Links International is the beneficial owner of royalties? Thank you.
Your Honor, we would like to mention once again, if the representative office is permanent establishments, then this is actually a beneficial owner of royalties, and that is, let me comment on your first point. This is our main claim. We want to claim representative office permanent establishments, but since the court decides otherwise and the representative office is not permanent establishment, then it is not clear for the tax authority who is actually the beneficial owner of so-called royalties deemed dividends, Links Apparel, Links International, or in our case, for the tax authority of Savasana country, so this is the particularity of the case, this is this is irrelevant, actually, because they are both residents of the same country. But we claim that if the representative office is not permanent establishment, then naturally Links Apparel may not be beneficial owner.
Sorry, again, either the royalties are attributable to the PE, then you need to prove that, or the royalties are not attributable to the PE. Please hear my argument, dear tax authority, because you need to get it right. You claim that there is a PE, and then Christopher said, so what? Okay, there is a PE, then what? It's first step. You need to proceed to the second step. What is the profitable attributable to the PE? Here you have two variants, one of the two. Either the royalties are fully attributable to the PE or not. If the royalties are fully attributable to the PE, then the royalties need to be taxed as part of profits of the PE, as part of the permanent establishment tax return, which you didn't prove. If the royalties are not attributed to the PE, then the fact that the rep office is a PE is not relevant for the case entirely. You just consider the treaty entitlement of Links Apparel, and then you proceed to the beneficial ownership and to the limitation of benefits. So please understand that. So if there is a PE and the royalties are not part of the profit of the PE, and then there are principles of attribution of profits, obviously, which are embodied in commentary to Article 7 and in the report of OECD on attribution of profits to permanent establishments. You basically should know all that, because you need to do the FAR analysis. You need to basically say that there is an economic link between the RMA, the payment under RMA, and the activity of the employees of the rep office, which you didn't. Or if you cannot do this, then you need to go to the beneficial ownership argument, and then you need to say that Links Apparel is not a beneficial owner, and then you prove it 1, 2, 3. But you cannot stop with, even on that, you cannot stop yet, as yet. You need to proceed to say whether the beneficial ownership is still located in the residence state. In that case is Asana. And if the beneficial owner is Links International, then the treaty benefits need to apply, because this is stated in the paragraph 4.6 of the OECD, of the commentary to OECD Model Convention. Paragraph 4.6 says that if the agent or nominee located in the contracting state is interposed between the beneficiary and the payer, if the beneficial owner is a resident of the other contracting state, then the treaty benefits are still applicable. Because please don't forget, the beneficial ownership is nothing but anti-conduit rule. It's an anti-conduit rule. It just says that treaty benefits do not apply if you interpose a conduit between the payer and the beneficial owner. But if the beneficial owner is in the same state, which is Asana, which is Links International, then you cannot reject the treaty benefits. Sorry, that's all from my side. I think I took too much time on the judge's question, so I think we need to give floor to other judges to ask questions.
Thank you very much for your question, for your commentary. Still, our party supposes that the sum can be partly associated with representative office as the PE, and basing on the cost plus concept, we suppose it can be referred to this way. In that very aspect, I suppose we have nothing to add.
Okay, thank you very much. I think the panel has exhausted its questions. I think we will give an opportunity to each party to make a very brief summarizing statement of their position, and then the court will depart to make its decision. So the claimant, you have an opportunity to make a very brief summary of your position, and then the defendant will have the same.
Your Honors, thank you for the opportunity. The requalification to dividends cannot take place in the case. Links Apparel has a beneficial ownership status in the current Links group. Thus, no withholding taxation at source should be applied, and no augmentation of the corporate profits tax base have to be applied. Thank you.
Thank you very much. Defendant.
Your Honor, thank you very much. The main concept we are voting for is the consideration that rep office can be considered as a PE, and then the qualification of the sums paid inside of the group shall be requalified under, dear colleagues, 5%.
Yeah, according to the Article 10 of the Model Tax Convention, at the rate of 5%. I'm sorry, at the rate applicable to the royalty payments in the Savasana country.
Okay. Okay. Thank you. I think now it's time for the court, for the judges to leave to take the decision. So can the administrator please maybe ask all the other parties to leave the conference while the judges make the decision?
Dear teams, can you please leave the Zoom and stay in waiting rooms?
We cannot actually by ourselves stay in the waiting room. You should have you should put us in the waiting room.
As an organizer, you have full powers to let us there.
I'm trying, but yesterday it worked, but not today. Can you just leave it, the Zoom and then connect again? You will wait for the decision. And
Okay, we'll do this as well.
But what is the time
The
waiting?
time, yes. You will maybe write us an email or... Okay.
yes, I will do.
Thank you very much.
Okay, are we